Hello and welcome to another update video about Natgas. Before we start, I have moved back to the NG1 continuous contract on TradingView because the prices are now literally the same, and it just made sense because here I've got the long-term chart as well, and I started to use it more and more. There was a time, you will remember that from like, it was middle of 2023, where the continuous contract prices on TradingView differed so much from the monthly ones that it just made sense to switch, but it's easier to have it all on the continuous, so we'll see how that goes. The structure isn't really affected. I have however labeled this again and would like to talk about the scenario here. We had a bit of a rally obviously from yesterday's low. It shouldn't really have been a surprise. You know, I've got the we talked about it only in yesterday's video. I'm not going to play yesterday's video, but this here was the chart, obviously, and we talked about the downside, and we said that circle wave 4 is basically next, okay? And the resistance that I showed you was $1.73 to $2 for wave 4. That has changed slightly on the continuous chart. So here it is now between $1.77 and $2.10. I will zoom in a minute. But overall, the structure is the same. So wave 4, circle wave 4 was what we were watching for. And then possibly we could still get one more low. I'm going to discuss that in detail with you. But here you saw that the downside wave count was full. In the days before that rally now, that corrective rally, that bounce occurred, we talked about the following. We talked about decreasing downside momentum. I only showed it to you yesterday that we saw less and less red candles. We saw bullish divergences. We had a break of the descending trend line. And I highlighted to you the wave count to the downside is full. I couldn't really extend it. I mean, extensions are always possible, but without evidence, I mean, you don't need to do it. It was basically technically full, this downside wave count. And yeah, that's when you have to be watching for a reversal. Obviously, you don't know until really the momentum finally starts. And I gave you a trigger point, 164. That was the previous swing high, and explained if we get above that level, likelihood increases that we get into this resistance area. And we pretty quickly actually got there. So now let's take a look at this chart. I have changed it a little bit, though. That might also have affected here the resistance area, but we haven't even broken the previous one. We've literally just only entered it. I have changed it in a way that I think it looks better now as an ending diagonal, this wave 5 as an ending diagonal. And the structure suggests that this move that started in November 2023 was a wave 1 to the downside, a wave 2 to the upside. This here is now a third wave that's possibly still in the making as an A, B, C structure, because we're dealing with a diagonal here in this interpretation. And then we could still get another 4 and another 5. Yeah, I cannot rule that out. I've added it to the chart because counting this as a diagonal shows that there could still be one more low afterwards. I cannot rule out that with the next low, obviously a long-term low is struck. So I'm definitely going to watch for possible reversal signals. But for now, all that has happened, we have literally just entered the resistance area. I'm now going to watch here for potential reactions between $1.77 and $2.10. A break above $2.10 will trigger a different variant of this count. And I could say that, okay, possibly this third wave was already done. We are already in this wave 4. And then there might just be one more low. Yeah. As we expected anyway, one more low. Oops, 1 second. But it might only happen then after a more substantial wave 4 recovery. In this scenario, if we break above $2.10, that would not necessarily be bullish. It would be more bullish, but it could simply be that this larger wave 4 is already unfolding. And it might make sense to then check for the upper boundary line of the trend channel for resistance. In addition to that, the resistance area would be slightly higher, and possibly 226 will then come into play. and because we are dealing there with a resistance of a diagonal even all the way up to 249. So that means very simple, if $2.10, that's the main level for this move to the downside. If that level is broken to the upside, the 249 level is the next major resistance level. That means in very simple terms, I'm not yet assuming that a lasting low is in place. Can I rule it out? No. I mean, this chart has dropped far enough, really, long term. But I need to see evidence. Yeah, we need to see a first 5-wave move to the upside, followed by a 3-wave pullback to suggest that something more bullish is going on. And we need to see, in addition to that, a break above $2.10. Then I might start to look really for a more bullish outcome. At the moment, I think still downside pressure remains high below resistance. I have no reason at the moment, at least, to, let's say, believe something different without having clear signals, because all that has happened so far is just a rally into resistance, okay? And as I said, if we don't see a reaction in this area between 177 and $2.10, then the $2.50 level pretty much comes into focus. And only if we break above resistances in this alternative scenario, yeah, then it becomes very clear that possibly the low is already in. But it would look quite good actually with one more low there in wave 5, wouldn't it? Have a nice ending diagonal pattern there. But I'll keep you updated. Yeah, if anything changes, I will let you know. That's sort of from what I see right now, the interpretation. We have a very, very short-term uptrend, yeah, but it's literally just green candles like we had them here. And I need clear signals. I think in the current situation, after this long-term downtrend, it's important to wait for long-term signals. I mean, if you believe we've seen already the lasting low, then if we get a next corrective pullback, you can always enter and set the stop loss below that 19th of February low. I mean, that is a reasonable approach. Just be aware that if we get a higher low, it could only be this A wave, B wave, C wave of this larger 4th wave. So be aware of that, which means it's time to be cautious then once we have that 3rd wave up. Not much more to add, so no surprises really, also not really anything major to report, but I think it made sense to communicate the idea of this ending diagonal and the idea of also a larger wave 4 that could unfold if the initial resistance area breaks. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, please check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.